Welcome to another episode of Learning About Loans, or another edition. I don't know if we have a series that we can call it an episode, but Justin Wood, as always, the great, amazing, incredible Justin Wood. Justin, what are we talking about today? We didn't even chat in the green room. What's today's topic?
Well, today we're talking about a question we get a lot, which are is bridge loans or some other factors and how we can get into our equity when we are trying to buy a new home and use the existing equity.
I know why we're talking about this. So again, to repeat what Justin just said, a bridge loan is when somebody owns an existing home and needs and wants equity out of it to use it to purchase new home. So Justin, that is a bridge loan. Let me ask this question. What are the common ways to do? There's two or three that I can think of. What are kind of the options that you recommend when somebody says, "Hey, I need a bridge loan"?
It usually starts with how much, first of all, how much debt we have currently, right? Can we afford both the new mortgage payment and the current mortgage payment? Secondly, what other kind of credit cards or consumer debts do we have, such as minimum monthly payments, obligations? And thirdly, what is the intent to pay off this financing or the intent to sell the current home? So I know it's not a direct answer to your question, but that kind of guides us where we're going to head when we provide direction on what type of financing we're going to
I
select.
love that. I don't know that I'd have given that answer, but I like your answer way better. And here's why. So number one was make sure they can qualify for both homes, right? That's step one from an income standpoint. That seems easy and obvious, right? So before you even say like, let's don't get into the weeds, let's just figure out if we can even have the conversation. But number two, and I thought it was so smart, how much do they need and want? Why is that important, Justin?
It typically depends on the amount of equity they have to tap into. Here in Texas, most homeowners have to have at least a 20% equity position. And that's in addition to like a combined loan to value or CLTV, right? So really, yes, you have equity, but can you get all of it as a result of the bridge loan? And the most often than not, it's no. You can only get a certain amount of equity out.
Yeah, and I think the other part too is oftentimes people say, "Well, man, I need 10 grand or I need 30 grand." Well, guys, there's other options besides a bridge loan. If somebody's sitting on a, $100,000 401k and they can just take a $50,000 or $30,000, 10,000, whatever their dollar amount was, if it's something that's obtainable through a loan, not a withdrawal, a loan from a 401k, there may be other options besides doing the bridge loan. The other thing, and I'm still in Justin's thunder, but just to make the point, sometimes people think they have to put down 20% on the new home. That's not the case. So, Justin, what do you do if somebody's like, man, Mark, or Justin, I do want to put down this $500,000 home. I want to put down 100 grand. I want to get to that 20%. But so I'm thinking I want a bridge loan, but they have 25 grand in the bank. What might be a different alternative besides a bridge loan?
Great question. So usually we'll start with just, hey, let's start with the 25 grand you have, right? Let's look at a 5% down option. You've got your monthly PMI short term. And then once your home does sell, assuming that you can qualify with both mortgage payments, we can do what's known as a mortgage recast. Really dip into the bridge loan a little bit, but long story short, a mortgage recast allows you to pay that balance down, get rid of the PMI to avoid up that 20% once your home's sold, and re-amortize the monthly payment on the new financing, which I know I'm throwing a lot of big words out there, but the bottom line is we can get you to that 20% to avoid PMI without paying all the expensive fees that a bridge loan would entail.
Yeah. In other words, going back to your original question is how much do they need and want? It's because there could be alternatives. Exactly what Justin said. Maybe you just put down a small down payment with cash you already have. Don't even worry about the bridge loan. And then when the house sells, put the money towards the new house. And like Justin said, there's ways to get rid of that PMI after you've already closed. So I love that. And then number three was the type and what you need. So if they do need a bridge loan, what does that look like? So let's say we figured out they do need a big amount for whatever reason. There aren't any other alternatives. They do need to tap into the cash here. What does that look like?
Yep. So here in Texas, the bridge loan process, you're normally going to need more than just a 20% equity position. When a bridge loan is originated, typically it's from a bank. We got a lot of local banks here in DFW, particularly that'll do them. So let's say you have a home worth 500 grand, you owe 250. You can pull the gap in equity up to 80% of the value. So 500 divided by two, you got 250. You can go up to 80%. Gives you access to about 150 grand for that maximum CLTV or combined loan to value for $400,000. Now, it's not a straight up 150, no fees involved or anything of that nature. How it typically works is the bridge loan lender will secure a second lien against your existing property for sale. advance those proceeds, and then net out any kind of closing costs involved. Once the home's sold, lien's paid off, as well as your first lien, and you get the capital you need now in order to qualify for the next purchase for the down payment.
Yeah. So in other words, guys, you're going to get in most cases, not every, but in most cases, you're going to go get a second lien mortgage where you pull that equity out. You can then use that cash for anything, but in this case, the purchase of a new home. And that's how you can do a bridge loan. Justin, is there any way I can do 100% financing? And again, this is few and far between, but I know we've done this before with somebody where they can, in theory, buy the new house, but it's all done under like one big mortgage. Is that an option for folks?
It is an option. It really comes down to the equity position on the new home, right? So if you've got someone who owns a property free and clear, right, they can actually leverage a majority of that equity on the bridge loan from the departing residents, as well as a lien securitized against the new resident. So the short answer is yes, you can do it, but you need a really strong equity position on your current home.
Yeah. So what Justin, we had an example where this was just two months ago, I want to say it was, sweet woman owned a $900,000 home. Let's say she had 200 grand left on her mortgage. So she's got 700 grand equity, wanted to buy a new house for 500 grand cash, downsizing. We just did one loan, one bridge loan for both of them. And she got to move in with 100% financing because she had the equity in the other. So combined, it worked and the numbers made sense. So she did that. Now the goal is typically once you do that, bridge loans do have slightly higher rates than a normal mortgage, but they're typically used to bridge the gap. So that's good. And to Justin's point about fees, sometimes they can be really, really low. Sometimes they could be a couple $1,000. And to be very clear, we could do your bridge loan. Justin and I can, we can do your bridge loan. We typically don't. Typically we refer out, and the reason being we know alternatives that we can send to. And while we could stay involved, it just would cost you more money. And we don't believe in that. If we're going to send you somebody, they're going to do the work, they're going to get paid. So bridge loans, they're great when we need them. I would say explore options to avoid, second set of fees, second set of documents, things like that. Justin, is there anything else I'm forgetting to bring up?
I think the biggest takeaway, instead of asking folks when they do approach us saying, hey, do you have a bridge loan? The answer, like Mark said, is yes, but it depends on what you're trying to do. There is not a one size fits all for these kind of products. And ultimately, to Mark's point, we can typically find an alternative or a cheaper, more affordable solution than just a straight up bridge loan. So yeah, we got them, but it's not always the best case.
Yeah. And that's what I'd say. If somebody needs a bridge loan, what I hear is when they say the word bridge loan is they have a problem that they need to have solved. And it doesn't necessarily have to be the bridge loan. So while they're great, there's ways to do it. Like Justin said, you can go get a second mortgage, pull out some equity there, or you can just do a one bridge loan where they don't count stuff and new payments. Both are good options because you can do it where some of these bridge loans don't count your current house against you because they know you're going to sell it. Timing wise, they can take weeks, they can take 30 days, they can take 6 weeks. I've had one where it took 12, right? So it's just a matter of contact us soon, contact us early in the process. Let's talk about it and we can walk you through it. But cost, rate, we kind of hit those. Rate's going to be higher than normal and it fluctuates. So that's why I'm not going to pretend to quote something here. Anything else, J-Dub?
Yeah, the bridge loans typically it's designed to be paid off, right? So normally it's going to have like a 6-month demand or balloon feature, right? 6, 12, 18 months. Depending on the originating, platform that we, pick when we're looking at it too. So it's not just it really is truthfully a short-term solution, influx of cash, but it will need to be paid off so you don't have to flip the bill.
Yep. And again, guys, think of the bridge is to get you to the other side. And once you're over there, you no longer need said bridge because you're not going back. So that's Justin's right. That's a really good point to make. So a lot of those, not all, but a lot of them do have a demand feature that says like, get us paid off quick, like 6 to 12 months, because the goal is to just help you get out of current home into new one. Mm-hmm. J-Dub, I appreciate you, my man. I'm sorry I wasn't here in the green room like I should have been, but you killed it as always. Thank you, everybody, for watching. Join us again next time for learning about loans.